Hi, everybody. Welcome back to another edition of VCTV. We're here to speak about our favorite subject, blockchain. But more importantly, we're going to go a layer deeper. And I mean that with all puns intended. We're going to go down to the looking at decentralized finance or DeFi. We're going to talk about financial services and payments and banking as well. We know that there's a lot continuing to happen in this part of the blockchain industry. And so because of that, we want to make sure we have a show dedicated to it. And before we get started, big thank you for all of you tuning in. If you're liking what you hear, make sure you click subscribe, share the episode, and check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. And if you would like to be part of that family and on a show here at VCTV, reach out to the team and or myself, your host, and we will find that right spot for you. A big thank you to the LATOKEN team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. Welcome, everybody, to getting started. And why today is a very important show is that with DeFi, a big thing happened earlier this week. Bitcoin hit all-time highs, just over $61,500, which brought its market cap to over $1.1 trillion, which, if you take the combined market cap of JP Morgan Chase, Bank of America, and the Industrial Commerce Bank of China, the three largest financial institutions in the world, their market cap is $1.08 trillion. So Bitcoin surpassed the combined market cap of the three largest banks. And even though we've pulled back a little bit, we're still above the combined market cap of Visa and MasterCard, which is just over $800 trillion. But let's dive into what that and a lot more means. Adrian, if you can, a little bit of an introduction and background on yourself.
Hello, everybody. My name is Adrian Niculescu. I'm an entrepreneur and an investor. My genius areas are sales, marketing, and business development. And I like to do stuff more than to just manage other people. I'm involved in a few projects. Cloudcoin Consortium. Cloudcoin is a post-blockchain digital currency. Faster Capital, a Dubai-based accelerator and incubator for startups. SAR Global Ventures, which is a London-based VC firm. And also I'm involved as a mentor in Richard Branson's program, Virgin Startups in UK. And right now I'm a little bit stranded in the rain, but in my car, of course, I have an access point from my phone, the tablet and everything, because if I say that I'm coming into a show, rarely it happens not to be able to do it. It has to be something very, very bad happening. Apart from that, my word is my commitment, and very happy all the time to speak about those hot subjects. Thank you very much for having me here. I can't hear you.
No, you cannot, and that was my fault, the mute button there. Yeah, it's exciting to have you, so always a pleasure, and appreciate you being here as well. And a lot to talk about in this industry. We also had eToro this morning announced they're going to be going public via a SPAC merger for roughly around $10 billion. DBS has also just successfully closed a trade financing transaction around Ant Group's blockchain platform. I mean, we are moving when it comes to decentralized finance. We're resting just under $43 billion in TVL, total value locked around protocols and applications. What are you seeing from your view as an investor happening in this industry? I mean, we're less than 3 months into the year, and it feels like the industry from DeFi, decentralized finance perspective, has pushed forward further than it did all of 2020. Adrian, I think we may have a delay. If you can hear me, what are you seeing in terms of your view of the world around DeFi here in 2021? All right. Well, no worries. Tons happening in the space. Hi, Julian. Welcome as well. A little intro and a little background for joining us today to the audience. Oh, Adrian, let me unmute you there. You have muted yourself, so you need to unmute you.
Oh, okay, cool. Can you guys
There you
hear
go.
me?
We can hear you loud and clear. A little intro and a little background for everybody.
Yeah, so sure. So my name is Julian Butalu. My background is very tech. I moved to the US where I did a master in machine learning, and got involved in blockchain in early stage back in 2011. So in Bitcoin, started Bitcoin first, and then jump into Ethereum in 2015. So right now I'm running a Stake Capital, which is a quantitative trading firm. So we do liquidity provider, market maker, liquidation, flash loans, and all different things. And also running Stake DAO. So Stake DAO is a platform. It's kind of like a decentralized exchange for retail, where we provide a strategy of investment and also a swap, people being able to buy tokens, and also going to turn into a version 2 where people will be able to access tools and features like you can find on centralized exchanges such as Binance, Kraken, Bitfinex, and all different things. Also running Blackpool. Blackpool is a hedge fund for NFTs. We probably one of the biggest hedge fund for holding NFTs on the market. We recently purchased something like about $6 million of NFTs. We have Mbappe, which is probably one of the most biggest NFT for gaming. So Surveyor that recently announced a $50 million raise from a benchmark, and also running Rect.News, which is a tech media company that go very deep into investigation of the different hacks and DeFi exploits that happening on the market. So we cover it's more like underground and very dark side of DeFi, and yeah, that's it.
Wow. So a lot to talk about then in that case. Let's see. Let's talk a little bit about the dark side of DeFi. Let's start there. And then I would love to get some of your thoughts around the NFT market and how that's playing in the world in the future of decentralized finances. We're already starting to see companies rise around lending and loans as using NFTs as collateral. But talk to us a little bit about the dark side of decentralized finance and what you and your team see happening in that space right now.
Yeah, I think dark side, it's more I think like DeFi is being growing up at speed of light, and different things can happen on DeFi. So obviously you can, I mean, for example, like what really start to this aspect of dark side was the yield farming movement in DeFi that start last year. But in DeFi, you can have access, you can actually see a lot of different things that the traditional finance can provide. But in DeFi, the reason why it's more, it's not very more dangerous, but because DeFi is accessible by anyone on the market and by some people that couldn't access traditional finance, since now they can access decentralized finance, they have to be aware that a lot of different things can happen. You can have exploits, hacks, but also like the most interesting bit are like cryptonomics, where people using DeFi legal, they can actually manipulate the market. People tend to say like manipulation, but the market is unregulated. And I would probably more like say it's actually an arbitrage market where people have the ability to understand the technology behind the DeFi, and they can use it and leverage their position, or actually make some specific move on the market that can either liquidate some users or can profit from those different arbitrage on a higher level. and then we have more interaction between traditional finance and decentralized finance. So for example, what happened on the past few days with Alameda and SBF, so from FTX, that did a deal on a traditional deal, but apparently wrecked a project called Reef Finance. So I think DeFi is whatever happened in traditional finance in the 90s and whatever, but on a higher level, because a lot of retail can jump in.
I see Adrian shaking his head. Adrian, anything to add? Thank you, Julian.
I like very much DeFi because nobody asks you if you are white, if you are black, your level of employment, your nationality in most cases, and it's a way to give back power to the little guy. Now the thing that it's concerning me, especially we've discussed in other shows about the security. When something bad happens, who is protecting the little guy? Because still there is a big jungle, as Julian mentioned, like the banking in 80s and 90s. And
well, I don't think actually the people using DeFi are less less protected than the people using traditional finance. I mean, you might remember 2009 subprime crisis, like all the different things.
of course, if you give that example,
saying that DeFi is less secure than traditional finance means that people using traditional finance never got wrecked, which is not true. So my point is like, actually traditional finance is more secure than decentralized finance is more secure because it's being controlled by a smart contract. The thing that is not secure is the interaction between all those different tools, because they're actually really new and a lot of different things can happen. But traditional finance, every single day, banking is getting hacked. Like either you go to an ATM fraud, Visa, MasterCard fraud, people losing money using SMS fraud. Every single day you have like people getting wrecked. But the thing is like, because the traditional institution can actually cover those losses, then the user on their hand, they never actually see those losses.
Right. So just that's one of two other pieces. So that has to be put out there, because if you start the conversation that it's safer than traditional finance, that actually skews a lot of viewers who are new to the industry. I mean, you have to look at that, because from a mass adoption point, it's actually not, right? So because of exactly what you said on the second part, is the tools that are being used are still very new. The user interfaces are not very simple and easy for most people to get into. And there's also the education piece. I mean, you're talking about giving people the ability to lend and loan and use things as collateral that, to be frank, most have not been educated on. This is a new world for many to be able to have that opportunity and ability. So there's the tools, there's the education, and then the last point you brought up too is that if something does have a hack, and traditional, centralized finance, a lot of times there is, money given back, whereas in decentralized finance, it's kind of a TBD unless there is insurance put into place. It's not always guaranteed. Money can be lost very quickly, which I think, again, that's changing. It's not necessarily, even though it was only a little bit ago, it's not 2009 where we're seeing those hacks.
Well, this thing is like,
hold on, Julian, hold on. We're not, hold on. It's not 2009 where we're seeing those hacks every month. It's a lot less, but it is something that still has occurred. But go ahead.
That's true. I mean, my point is like, obviously, with great power comes big responsibilities.
Yes.
And if decentralized finance is about not your key, not your money, or we actually disrupting the entire financial, like whoever is a middleman, then everyone can actually become the middleman. Then obviously, if you lose your key, you can lose money. If you invest in projects that are offering big APY, more than 1,000% APY, without actually looking who's running the project, you're just jumping into it because of greediness. I think I don't want to be mean, but I think if you get savagely wrecked, then sometimes most people they deserve it, because they I mean, you got like tons of different projects in the market, and I think education is quite. A lot of people are doing educational courses, I mean classes, It's but right now, it's quite, people are just jumping on the social network and they're like, oh, this project is offering so much APY, so I'm jumping into it, and then they lose money, and then they try to go after the founder, or they try to go after the team without actually doing research before jumping into the project. So I think you had a mix of everything. It's just about finding a good threshold. But obviously, what we're building right now, if we really believe in this vision, then people have to be very cautious, obviously.
And I want to call out one part you just mentioned is research, because that's exactly what my point was too, is on the education. I mean, you have to do your own research. To your point, don't just jump in to jump in. Make sure you know what you're getting into. I think that is one of the big dark sides still of any kind of finance. It doesn't matter what it is. I mean, if you just jump in without doing any kind of research, you've put yourself in a position, unfortunately, to take and assume all of the risk. So you're absolutely right on that as well, Julian. Thank you. Adrian, anything to add? And then I want to switch into DeFi a little bit and DAOs as that's another subject we should talk about here. But Adrian, anything to add on to Julian's point?
Yes. When you are doing the research, you need to go beyond what you are seeing, because the websites, the white papers usually are created by professional marketers, and the content there is the content you as a target market want to see. So you need to understand very well the business models behind these platforms. Actually, what the eyes can't see is very important as part of the research, because the way a crypto project is promoted or a DeFi project is promoted is the same with the detergent on TV, or a house by the sea, or jeans, or everything else. It's a marketing exercise, and you are sold on the opportunity. You need to go beyond that. Very important.
So that's a perfect transition into NFTs. So Julian, I want to start with you. I mean, the NFT, non-fungible tokens, to our audience who may not be familiar with the term, NFTs is a hot market, and we know that from sales all the way from a couple dollars to almost $70 million recently with Beeple's recent sale. We've got the sports industry and athletes and celebrities starting to enter in the market. Rob Gronkowski, NFL player, sold almost $2 million worth of NFTs over the weekend. NBA Top Shot, So Rare, which you're an investor in, along with CryptoPunks and Mooncats. Those 4 decentralized applications built around NFTs are now doing almost $10 million in volume a day. This is something of a moment, and something I think that's probably going to be here to stay as it evolves. You've built a hedge fund around this. Talk to us about why you decided to go into that market of the hedge fund and maybe some of these investments. What do you see as the industry's potential, more than just a moment in time?
Yeah. I think like when I first got involved in NFTs last year, there was not so much. I mean, in 2017, there was the bull run of NFTs with CryptoKitties. I think CryptoKitties actually bootstrapped the NFT market. But then after the bear market, no one was really into NFTs except some people like from arts. But then I invest, stake capital in myself. We invest in Sorare, so the football fantasy game that are using NFTs. But the reason why we got so much involved in this game is like it's really different. Most of the NFTs on the market are really speculative assets. So what actually Sorare is doing, they match physical data. So if you watch a physical game on TV, and for example you see PSG or Chelsea or Barcelona playing, what actually Sorare is doing is using Opta. Opta is one of the biggest analytic company in the world, where they match the analytic into the NFT. So while you're watching the game, the NFT that you bought, for example, we bought Mbappe for, back then that was like about like 150,000 US dollars. we bought it. So now every time Mbappe score a goal, win a game, then this NFT goes up in XP, like normal experience. Like if you were playing a game, and then by playing like Football Manager, then we use this NFT in the game, and because we are getting more XP, then we win more and more NFTs in the game. So we go up in value. That's the reason now Mbappe on the market is probably worth more than $1 million US. So last year when we got involved in Sorare, the question was how I was like just looking for NFTs that can actually create some passive income. So by passive income, I mean like you play the NFT on some specific games or whatever, you can actually lend them on the lending borrowing market. But Sorare was the perfect start. So then I got inside and got involved into the game, and then I quickly realized that playing the game was a 24 hours, 7 days a week job. So then I got someone to play with my portfolio, and it went very well. So then I was like, oh wow, what about like doing this for different verticals? And then I look at Sorare on the top of the board, and one of the top of the board was actually a friend called Max, and Max has been playing quite well the game. And I talked to him. I said, listen, you want to join this initiative? It's a fund. We invest, we provide capital for people to play the game for us, and that's what we did. So then we got Max. Then we got someone else called AG. AG, I think it was like second position on the game. So now we're the biggest player, biggest fund on Sorare. We start from last year. I think our portfolio is worth like more than $3-4 million US on Sorare.
Wow.
And then we said, okay, that was a success. So what about opening new verticals? But looking at as a traditional financial company. So you have real estate, you have gaming, you have arts, you have all those different verticals. How can we buy NFTs that we can lend them, we can play the game, and then receive a passive income? That's how we started. And I think it's really good because NFTs is booming, but also we can actually use those NFTs that we bought to lend them on the market, borrow against, and then provide liquidity, for example, on stake DAO for conservative strategy or whatever. So it's like it's a massive loop that we can now leverage because there's everyone talking about NFTs, obviously, but we should see NFTs not just as gaming assets or like whatever, like a speculative asset, but actually like normal asset in the real life. So for example, I'm sure that the market will soon create, for example, NFT that will present share in debt, not national debt, but maybe company debts. You can actually have real estate, cars, like all these different things.
And we've started seeing a little bit of that activity around artists and musicians in the entertainment industry as well. And I think you're spot on to where the industry is going. Adrian, anything to add around NFTs and the future of them as it's starting to become more than a moment by all means?
Something I'm seeing these days is about the ownership of the content, which is transforming into NFTs, because there are situations when, let's say, a content owned by somebody is downloaded by somebody else, transformed into an NFT and sold. And I believe this is a very important problem. Is more of a copywriting type of problem, but how do you solve it? Because to track the ownership of a content which is transformed into NFTs, you need like a whole team of experts to be able to monitor that. This is something I don't know how it will be solved. Of course, a little bit of piracy will exist here. Even if we are talking about blockchain, about proving that thing is genuine or something like that. If it's built on a content which is not yours, how do you deal with it?
I don't understand the question, so can you repeat?
Let's say you have 30 pictures on Instagram, and I download 10 of your pictures and I sell them as NFTs on OpenSea under, let's say, one account, and I collect the money for your pictures. but I'm not the owner of the content. I don't have any agreement with you, and you will be pissed off after a while.
Yeah.
So
Well,
if
it seems like
it can be applied to everything.
Julian, did you get the question, or I can summarize it if not? Were you able to hear that? Okay.
Yeah, I got the question. The thing is, like, if the content is not published on the personal account of the user who's having those images, then there's no point of buying those NFTs. I mean, the NFT should be a representation of if it's actually something that is digital, you can actually prove that if the NFT was changed or not, the art was changed or not, and you can actually monitor online if someone views the art or not. If it's an NFT that represents a physical asset, such as a piece of art like a painting, then this NFT doesn't actually represent this the materials that are being put in on the NFT, but more like the copyright that someone can actually change this NFT for future ownership of that piece of art. But on someone copying content on Instagram, what if the NFTs are not shared and the link are not shared on Instagram? Then it's just not coming from the same guy, and that's it. That could be.
Yeah, I was just going to say to that point, and we may have lost Adrian here for just a moment, but that's actually an interesting conversation that's happening right now, and goes back to what you mentioned around DeFi, Julian. I mean, right now we've seen a few people start that conversation of saying this was my photograph and you're trying to sell this, right? Or I own the IP rights and you're trying to sell this picture. And so there's that discussion and pushback, which leads into what decentralized finance is partially all about, and leading that into the power of the crowd, the power of individuals to make those types of decisions, right? So if you see, we had news that DC Comics, I think you probably saw as well, is looking to get into NFTs. And if someone puts up a Batman, for instance, graphic that they did not hand draw, and they just copy and pasted it, that's up to the market to push back and say, no, this is not something that we want. Is that correct? Is that what you're seeing as well?
I think if someone say that's not something that we want, then it will not enforce people to not buy it. I think the only way that you can enforce people to, the only way you can enforce an NFT to have intrinsic value, it's actually being able to use it for a specific utility. So, for example, if Comic Marvin, they do their own NFT, then I will guess that you can use them to either have access to premium content from that specific company that is issuing those NFTs. So if someone copying the art, display them on OpenSea, and then someone buy this NFT, then this person won't be able to do anything on Marvin. So then this is just like useless piece of NFT. So, but obviously, if people copy arts and then they try to sell it as NFT, you might have people to buy it as kind of like a fake piece of NFT, but that's fine if there's a secondary market for it. But my point is, like, real NFT should be used to provide utility. So what you could do is the lending platform could say, okay, you bought this very nice Picasso NFT, which represent ownership. And because the NFT has a specific ID, I don't want to enter like in deep technical aspects of the NFT, but what you can do is just like, if someone provide and stake it and provide this NFT as liquidity inside the lending platform, then it's just the smart contract will say, okay, this NFT is a copy, we don't accept it, or this NFT is actually not a copy, and then we can give you a loan. That's the beauty of it.
Yeah, and that's the evolution, right? That's what's coming. I think right now, the question and the conversation, a lot of people are just testing some of this stuff out and are just getting into this for the first time from the creation standpoint, which has led to some of this. And there's always bad actors. Let's be honest. Yeah. There's always going to be bad actors that do that type of
exactly. But right now, if you want to go on the market and copy and create the Ethereum token, or you want to create any token, you can. It's free.
Yeah, exactly.
It's freedom. It's freedom. But this token won't have any value except if you have a bunch of people that start buying it. But that's their fault,
Right. And if you pay $1 for it, it's because you see $1 worth of value. And if you don't get $1 worth of value, that's the lesson to be had as well. So yeah, I think that's a great point that's continually being missed. But guys, I want to be sensitive of your time today. And Julian, I have one more big question for you. So I believe in your introduction, you mentioned about market making. And this is something that you and one of your companies do. And, you know, Aave today just announced a new AMM, their new automatic market maker as well. Talk to us about maybe that release, but in general, like, where is this all going as these market makers come into place? And some of the audience may not know what that is. So maybe a quick description of why that's important.
Yeah, actually, Aave didn't really release an auto market maker, meaning that as a bounding curve or whatever. They actually released a pool where people can provide liquidity pool tokens.
Yep.
Yeah, so it's different, meaning that people can actually borrow or lend liquidity pool token, for example, from Curve, from StakeDAO, from like all these different tokens that can actually be provided to Aave, where you can borrow against, which is like pretty cool, because instead of providing the underlying asset, just as CRV, which is a Curve, SDT, which is a StakeDAO, or other asset like Compound, Uniswap, and all those different things, you basically provide liquidity inside those platforms, like Curve, and then you get a liquidity token that represents your fractional ownership of your liquidity that you provide into Curve. And you can take it, put it on Aave, and borrow against. So when you do that, you either can deposit back into Curve, so you increase your leverage, meaning that you basically increase your exposure to that specific liquidity that you already provide on the other side, or you can just invest in other asset, so you can actually hedge your position. But yeah, I'm not sure if people realize, but whatever actually being built right now is actually this revolution, this financial revolution. It's exactly like the traditional market, how the banking system came up, and then few different satellites around this banking system create lending, exchanges. Now we don't actually talk about traders, we talk about auto market maker, which is actually replacing the market makers like hedge fund and all those people that used to do the job to provide a quote for specific assets. So instead of handing with a high slippage or big spread on a specific trade on the exchanges, then you have like when you go to an exchange, you want to make sure that when you want to buy, I don't know, you want to it's like a traditional market. If you want to buy a house, you don't want to end up like paying a huge premium. If you want to go to an exchange, you want to buy Bitcoin. Then if the price of Bitcoin is $60,000 and you want to buy 10 million of Bitcoin, you want to buy them at $60,000, not like have a high slippage. But now with decentralized finance, because of those auto market maker, you don't need market makers anymore. I mean, you don't need like traders to provide you for the best growth, like what you like normal business used to do before, like TransferWise now, or even Revolut, they're actually doing behind the scene. Well, now we're just decentralizing the entire thing. And what is actually good in this one is and that's the reason why it's unstoppable. It's not because we say this is good. It's because all the profits that we generate are putting back to the people. That's why it's a new way of thinking. It's like you cannot stop it, because the more you provide, then the more you get as a user. Then no one can stop it. That's the thing.
Right. I'd say thank you, Julian. I really appreciate explaining that to everybody. And guys, I want to be again sensitive of time, so we're going to come to close here and get some closing thoughts out as to where this industry is going to go, and of course where you can be found online for those tuning in who can continue the conversation with you. So Adrian, closing thoughts around DeFi and the future of payments and banking, and then of course where everyone can find you online to continue the conversation.
DeFi becomes more and more present than the future, and it's a new paradigm. And as I always say, and I've learned a lot during this panel, by the way, it's a learning curve, and you need to put the effort to upgrade the knowledge, so to be ahead of the curve. I can be contacted on LinkedIn. That one is my main communication hub, Adrian Niculescu. Thank you very much for having me here, and can't wait to come back to the next shows.
Thank you, Adrian. Julian, to you, same question. Closing thoughts around the future of decentralized finance in the industry that you play so much in, but then also where you can be found online, along with your companies, for those that want to continue the conversation.
Yeah, sure. I think whatever you've seen in decentralized finance, I think now we have like 10 billion, like less than 10 billion, something like 8 or 9 billion being blocked in DeFi, but a crypto market cap is above a trillion. But my point is like whatever we've seen so far is actually nothing compared to what's coming in the coming months, in the coming years. It's a decentralization of the existing way of how the society is being run. It won't be a perfect society, but I think it's a better one, one in the sense that whatever we had access before, then this new one will be more accessible for the mass, and anyone can jump in. So that's actually already an improvement. But obviously, you will have big actors capturing most of the value because it's how capitalism works. But I think you give a chance to anyone to get involved. You can. I will also ask everyone to actually check the latest. That's the news that Rect.news. They actually released a new post talking about traditional finance, how some people can easily get wrecked than with decentralized finance. But what you can actually see on this tech media thing is that you can see all the different exploits, all the different hacks, and you can actually understand how to not get hacked and also like stay safe. You can find me on Twitter. It's actually my name reversed, so it's Julian B Neluge, which is like Julian on the other side. So B Neluge, and you can find me, and I'll be more happy to answer your question.
Wonderful. Adrian, Julian, thank you both so very much. To the audience, thank you so much for tuning in. Make sure you check out and also reach out to continue the conversation with both Julian and Adrian as well, and their respective projects. And again, thank you all for tuning in. We'll be back here in just a few minutes with more VCTV. Make sure to check out the archive on LATOKEN.com. And if you'd like to be on a show like today, reach out to the team and or myself. And a big thank you to the LATOKEN team and to Maria for making VCTV possible. I'm your host, Kyle Ellicott. You can find. Oh, sorry. Go ahead,
Thank
Julian.
you, guys. Thank you, guys. You guys rock. Thank you for having us.
Thank you. You both as well. And everyone, you can find me along with the entire team online 24/7, 365. You can find me on Twitter and social media at Kyle Ellicott. And we'll be taking here a short break and we'll be back with more VCTV. Everyone have a great day. Take care. Bye.
Bye. Thank you.